Hello, and welcome to Quaint Talk Show, where we decode finance and unravel the world economy in just a few minutes. I am Kiran, with me Vijay, your guide through this intricate world of money matters. Today's topic is Bitcoin ETF in US. Hi Vijay.
Hi.
Recently, the Securities Exchange Commission in the US approved spot Bitcoin exchange traded products. It seems to be a significant step. Can you provide your views on this development?
Thank you, Kiran. Yes, the SEC approved the spot Bitcoin ETFs on 10th of January 2024. That means this month's 10th. It's a big thing because the industry was expecting this or trying to pursue this for the last decade, and finally they got it. Before this approval came, the only way you could have exposure is by opening an account with any of the cryptocurrency exchanges like FTX, Coinbase, or Binance. Now, the problem is that these exchanges were not registered in the US, they were registered elsewhere, and the governance was always an issue. And we know what happened to FTX. The other way somebody could have an exposure is to or is via the exchange traded derivatives that are traded on exchanges like your CME, Chicago Mercantile Exchange. So these are the two ways in which one can have an could have an exposure, either by directly opening the accounts and direct
Hmm.
investments into the bitcoins or via exchange traded derivatives. Now, over the last decade, some 20 funds have approached SEC for approval for spot bitcoins. The SEC rejected all of them. Now, one of those 20 funds, Grayscale, which advertises itself as the largest asset manager of crypto asset manager, it went to the court and later on to the appeals court in the District of Columbia. So the appeals court gave a verdict recently, which is in favor of the Grayscale. Now, the SEC could have probably taken up this matter, or in the sense that it could have given a better explanation as to why it was rejecting to the court. In fact, the court was unhappy that SEC did not. If you look into the court verdict, the court clearly stated that it was not satisfied with the defense of the SEC as to why it was rejecting the applications. So the SEC could have given a better explanation or went for an appeal to the higher court, like the Supreme Court or something. But I think it took a call that it is better to give permission to the bitcoins. So whatever could be the reasons for the SEC, finally they have given the permission, and it's a good thing for the industry.
Okay, so there are close to 10,000 cryptocurrencies in the world. Why is the approval only for Bitcoin and not for other cryptocurrencies such as Ether, Cardano?
Uh, the this issue is a bit tricky in the sense that there is no clear cut answer. But let me put it this way: the issue is slightly more broader as to are cryptocurrencies securities or commodities in the US? That is the main question. Now, the SEC thinks that Bitcoin is a commodity, while a lot of other cryptocurrencies are not. It says that they are securities. Now, there is an old law of 1947 or something, based upon which this entire stance comes of the SEC as to how do you differentiate something, or how do you classify something as a commodity, and how do you classify something which is very similar as a security. Because the moment you classify as a security, then the security acts will come into place. All the securities laws that are there of the SEC, whether it be investor disclosure or any other safeguards, everything will have to be complied with.
Hmm.
But if it is a commodity, then it does not come, because the Securities and Exchange Commission job is to take care of the securities. But if
Yes.
you classify something as a commodity, then the it is not required. I mean, the compliance requirements are not so. Take for example gold ETFs. Now, gold is not really a security, just an asset class. You can think of it like a security, but it is just an asset class. So gold is a commodity, and hence there is no problem for the SEC to give any permission for gold ETFs. So if you put a Bitcoin as a commodity, then there is no problem. If you can
Mm.
equate Bitcoin as a as equivalent to a gold, then if you have given a permission to a gold ETF, then
Yes.
it automatically follows that there is no reason why you can not give a permission to a Bitcoin ETF.
Mm.
Now, the reason why Bitcoin is considered as a commodity, or at least the SEC, takes that particular line, is because Bitcoin is anonymous and open source. That means investor profits are not dependent on the efforts of the developers and managers in the case of Bitcoins. So it is something that is widely held. It is totally anonymous since the day it has been started and structured from 2008. It
Mm.
has been totally anonymous. So because of it, it thinks that, at least the SEC thinks that it is a commodity. We cannot say the same thing for other currencies, including Ether or for that matter, Cardo or any other cryptocurrencies. So I think it is with regard to the SEC stance as to how it looks into the cryptocurrencies. Not everyone, every single cryptocurrency is looked into in the same stance.
Mm.
In case of the Bitcoin, it thinks that it is a commodity, and hence I think it is willing to, probably. That's why the permission is only for the Bitcoin as of now. Uh, Maybe other currencies could come. I have read
Mm.
it somewhere that I think the JP Morgan or somebody was predicting that there is a 50% chance that Ether could also get permission. Spot Ether, ETFs could also get permission by the end of this year. But that's a chance. As of now, it is only for Bitcoin.
Okay. Will this decision increase the price of Bitcoin?
It should. Uh, Now, the current market does not tell the same story because it used to be at 46. Right now, it is around $40,000 or something like that. So, what happened in the last 1 month since the decision came is a different story. But in the long run, medium to long run, the prices are should expected to go. For one reason, that if you see the announcement date of the SEC that came on 10th of January this month. The very next day, it was reported, even on Bloomberg, that around 4.6 billion dollar worth of funds have flown into Bitcoin. There are 11
Mm.
funds, I think, which got the approval from the SEC. So they have attracted close to about 4.6 billion the very next day, that is on the 11th. So to that extent, and also there is one more report from Standard Chartered or something which says that around they're expecting around $100 billion worth of flows into the Bitcoin ETF by the end of this year. So if $100 billion, even if you take $50 billion, half of what they are saying, if chasing the bitcoins, so obviously there should be some kind of expect some kind of a increase in the price. I won't be surprised if I see the Bitcoin price around $70,000 by the end of this year. But then I don't think anybody watching our podcast would think take it as an investment advice. This is
Yeah.
purely just something that I feel, and I could be proved very easily wrong by the end of this year. But then it is something I guess that maybe because of the purely of the quantum of the money,
Mm.
that it is possible that it probably it will increase.
And what is it for the retail investors like you and me, leaving the institutional investors?
Now, for the retail investors earlier, there were two options because retail investors did not bother to, does not have much of an exposure under the exchange traded derivatives. They are not necessarily a big participants into that kind of a market, which they could, but then they are not. But then I think their investment into the bitcoins has mostly be via creating the accounts uh, with the Bitcoin exchanges, like the Binance and
Mm.
Coinbase and any other such kind of exchanges. Now, the only problem is that these exchanges are not registered in the US. Take the case of Coinbase, that is registered in Kenya. Binance is also registered elsewhere. So, if something goes wrong, then there is no
Mm.
investor protection because these companies are not US registered companies. So, to that extent, if you see now with the current ruling, retail investors don't have to really open the account. The issue is that when you open the account, both the private and public key are kept with the exchange under
Mm.
the custodial arrangements. But if the entire custodial arrangement, like in case of FTX, you could have opened an account, but then FTX got burst. So you are giving somebody the custody of your private and public keys, and they themselves have got bust. So whom do you go and blame? You can't go to SEC because it is not registered there. So whom do you catch hold of? So investor protection is a big concern in the current arrangement. But with this particular approval, you are not really giving your money to the exchange. You are giving your money to a US registered fund. Okay.
Hmm.
Now there will be a system in place. They will have the checks and balances. They will create a methodology through which they would can ensure that the bitcoins are stored properly
Hmm.
and it is not lost. So in terms of the retail, if I were to choose doing the way I used to do it right now, opening an account with some kind of an exchange,
Hmm.
vis-a-vis giving my money to an US registered fund,
Hmm.
I would choose the latter just because of the better safeguards.
True. Do you see any cause for concern?
Yes, particularly Bitcoin, the entire cryptocurrency is relatively new. It came only in 2008. So this is not like a debt market and equity market that existed for the last 100 or more than 100 years. This is something that came out just about 20 years back. No, it's 20 years, still a long time, but not long enough.
Yeah.
And there are many, and the entire cryptocurrency itself has, gone ups and downs. There are many issues with regard to cryptocurrency. How do we treat them? I mean, we don't treat them as legal tender, at least in the known world, except two countries. I think El Salvador and Central African Republic. These are the two countries that have made Bitcoin as a legal tender. But apart from that, most of the world, including any of the nations on the G20, has not made it as a crypto as a legal tender. So
Hmm.
we call it as a cryptocurrency, but it is not really a currency because the government doesn't, treat it so.
True.
So to that extent, they are not really currencies. So if they are not really currencies, because there is no official approval from that matter, so what they are they digital assets? Do you consider itself as like a art or a wine collection or something like that? How do you this one? So currently, we are only thinking of it as like a digital asset. But the entire asset class needs to mature. We have come a long way. 20 years is a good enough time. So all the cryptocurrencies have gone ups and downs. Exchanges have gone bust. Quite a lot of questions have been asked about the industry. The industry itself has put in itself, and I mean the cryptocurrencies, exchanges, miners. Everybody has also figured out how to do this business. So we have come a long way in the last 20 years, but still there is a long way to go. The main thing cause of concern is the uncertainty. Now, uh, I can give you one more example of this uncertainty. Look into the statement of the chairman of SEC soon after the approval. So the chairman Gary Gensler, he has given a statement saying that while they have approved spot Bitcoin ETFs, they are not approving Bitcoin. That was a statement soon after they have given the approval. So they gave the approval to the ETF. That does not mean that they like Bitcoins. There is a bit of vagueness and uncertainty that is there, and hence I think that investors should be cautious unless they are well aware of what this entire digital asset is and what their future is, which is purely speculative at this point of time. And the SEC itself in a statement says that it is speculative. So there are causes of concern, I would say.
Okay. Thank you, Vijay. Thanks for sharing your views. This ends our talk show for today, and we will come up with next topic soon. Thanks a lot, viewers, for watching. Have a nice day.
Thank you.
Thanks.